Alright, this is Bob Joyner, and in today's video I want to take a look at TNET. I'm recording this on August the 4th, 2015, and as you can see, TNET was a big gap down this morning. One of the things that we trade in the Day Trading Pro chat room, of course, are the gaps. It's our main focus. And so when we have a big gap like this, there are a couple different ways to trade it. But just to kind of look at the gap, first off, we can kind of look at this area here and measure that, and you can see in that little data box that pops up there, it's about a 35% drop in price overnight. So that's a huge drop. So one of the things that we usually do is we'll draw a Fibonacci. So we'll take the Fibonacci retracement, pull from the previous day's closing price down to the low, and of course price continues to move lower, so you could have just traded that area. But I want to show you where we caught it today. And so down in here you finally see a low. Now normally on a gap down we're going to wait until we see a 23% retracement before taking that trade long. But there were some other things happening, some other indicators that I'm not showing on the chart right here from the chat room members, where we took that trade a little bit earlier than that part. We actually got into the trade at 1652, which is right around where you can see the price right in here. So we actually got into the trade right around in there. And as you can see, it continued to go higher, went above 18 before it started to retrace here. But that's a nice move if you pull from that area in there. Pull from that area in there. Up to those high points there, then you're talking about a 6 to 7% profit if you held on to even part of the trade there. Of course, one of the things we talk about is taking a partial exit and movable stop. But another thing that you can do to kind of see if you're staying on the right side of the trade is to also draw a Fibonacci from that low up to wherever the current high is. So we're going to take the Fibonacci tool again, and we're going to start at that low price. And we're going to take a fib drawing back from here, and I'm going to just draw it up to this area right in here, and we're going to color that one blue just so it stands out a little bit here on our charts. And tweak the lines so they exactly line up there. So one of the things as the chart progresses here, expand that out so you can see it a little bit better, is you can see that we come up to this point in here, or right in here is where I've drawn fib lines from the bottom, the low of the day, up to the high of the day at that point. And as you can see, as we come back down, where might we get back into that trade again, and right in here we come down to the 23% retracement of that recovery rally, and that's basically a short covering rally, because whenever we have a stock that's gapped down that much, put yourself in the people's shoes who perhaps shorted it the day before or weeks before, and they see a 36% drop. Put yourself in their shoes. What would you be doing? Well, as price goes up, you don't want to lose more and more of that, so different people are going to be covering those shorts at different points. Other people are going to see that rally happening and jump in on the long side even if they weren't short before, and that whole thing starts to snowball a little bit. Has its limitations, of course. It's unlikely that you would see a complete gap fill of a 35% drop there, but it doesn't mean that you're not going to be able to catch some of that rally coming back up. So we come up into here, as I mentioned, pull it out so you can see it a little bit better. We come back down to the 23% fib line, and then we make another push up in here, so we can always extend that line up again. By this point you can see we've come above the 23% fib line that was drawn from the morning drop back down in this direction. So at that point we have a different kind of a qualification to go long up in this area here. And then it finally starts to break down as we move the chart to the right there on the far right edge. You can see we drop back below that 23% fib line, and then we finally drop below this 23% fib line, and we have a reason to take this pair short because we're back below both 23% fib lines here, and price continues lower. So kind of an interesting trade. I'm recording this at 3:28, so the session is not quite over yet, but I just wanted to record that while the trade was still happening and let you see the multiple opportunities that were available on that trade. Again, my overall consensus would be that this was a short covering rally, so you can go long, participate in the short covering rally. You can be aware of where price begins to hit its head. You can use the fib line from the original gap down, then you can draw from the low to the high back the opposite direction to see a reason to go back into a short position. And of course, right in here is where we break down below both 23% fib lines, right in there. And then so you could have played that both long and short. Could have played it long a couple of times and then short again as it came all the way back down into here. Very interesting trade today. Hope that's helpful for you as you trade the market.